at the Family Office Summit in London, panels were set by our Family Office members. Instead of making them sponsor-driven, we want to make them driven by our guests so they can actually learn some stuff.
Yeah.
And one of the major things that came up was it's very hard to know what other people are getting paid in other family offices, and if they are on par, above, below. I guess you're one of the only people that really know that. So that's in the report. It's useful data.
London, again, is probably, regardless of what's happened with change of government and change of policies, London is still, seen as a hub for, the professional services industry, expertise and talent. Families still want to be here culturally, so, there's a lot of family offices set up here, and these are, again, still new, well families.
Okay, welcome back to the AU podcast. Hey Luce, how's it going today?
Hey Gus, yeah, I'm doing good actually. Feeling pretty fresh after a crazy week in Miami.
Yeah, the start of the year is tough, right?
Yes.
So it's full on.
Yeah.
I can't even begin to think how many different LPs and GPs we've been talking to, family offices in Miami, but around the world, and planning the whole rest of the year. I'm already exhausted.
How are you feeling about everything in general?
Yeah, great. I mean, the family office process that we're going through, and we seem to say family office every third word at the moment, but it is where we are, so let's not shy away from it.
We could make it a drinking game.
Yeah, we can make it. Roxanne.
Yeah.
It gets stronger and stronger, and as more people join the community, the connections between those people get stronger, and we are able to kind of do what we are aiming to do, which is really, really build up a network of trust, and start to be a bit more selective about who's able to come in and actually call themselves a family office, which is working. So yeah, I'm really excited about that, and I'm really excited about the rest of the year. We've got a crazy calendar of events happening.
Well, you've got a crazy personal calendar. You're literally having a baby next week.
Yeah, baby's on the way. So you'll be doing the traveling from now on in our normal cities, so New York, Miami, Zurich, Geneva, and you're adding Dubai right now. We're also in Cornwall for the ski trip, which is coming up on March 20th. So yeah, lots of stuff going on. What are you excited about? Same stuff, or have you got some secrets?
No secrets, unfortunately. Yes, I'm very excited. To be honest with you, I'm very excited. I mean, I love co-hosting and doing all the events and traveling with you, but I'm excited for that next step in my career to be able to kind of focus and host all these events on my own. Bit scary.
Well, today we spoke with our friend Paul Westall from Agreus, who's again another long-term friend. One of the few. There aren't many family office recruiters and specific single family office only recruiters in the space, and he's got some insight, hasn't he? He knows a lot about how the world works in the family office world, which is a rare thing.
It is. It really is. I think understanding, I guess, especially from the actual process that family offices go about in terms of getting talent and retaining talent. Super interesting.
Really opaque space. I mean, there's very few people in the world that can actually say they understand it, because once you're in a family office, you know that family office, and you don't know the whole space. So he talked a bit about their surveys and research reports, which I think we need to be sharing and learning from. Let's not talk anymore. Let's just get straight into it. Here's Paul Westall. Well, hi Paul. Welcome to the AU podcast. It's great to have you here, joining myself and Lucy on a horrible day in London. It's pretty nasty outside, but it's warm and cosy in here. So thanks for coming.
Thanks for having me.
Can you maybe start off with a bit of an introduction about you and your business and the history behind it, how you got there?
Yeah, sure, no worries. Yeah, so my name's Paul Westall. I'm one of the co-founders of Agreus. So we are a resourcing and recruitment company that works exclusively with family offices. It's only single family offices. There's no wealth management, banks. It's a pure specialism. We've been in business now for 15 years. This is our 15th year of working.
Congratulations.
Yeah, I know. Time flies, hey? So I'm based in London, where it all started with my business partner Tyab. We then opened up a business in New York to cover the US market. We've got an office in Singapore, covering the Singapore Asia market. And we've recently opened up in Dubai, where Tyab, my business partner, is currently now. And I think enjoying it rather than the weather here in London today. So yes.
Definitely envious of him being in Dubai right now for sure.
100%. Yeah.
January in London's not much fun. Is it?
He doesn't gloat at all, honestly. Yeah. But no. So we started purely. We saw an opportunity after the pandemic. I guess we saw families that had traditionally had discretionary mandates with banks. Being not wanting that relationship so strongly connected as they did have then, and obviously wanted a bit more control. And that's when we saw the sort of, particularly in London, the growth of family offices being set up. So that's where it all started.
And where was it? Did you come from a recruitment background before that, and you then focused in on the families?
Yeah, so it's a bit of a unique one. So I came from sort of a sporting background, playing football, went into a football agency. It wasn't quite sort of the world I thought it was going to be, and then sort of fell into recruitment like a lot of people do. Initially, it was a firm that focused on the broader financial markets. We focused on wealth management, and then essentially my business partner and I were in the same business. We decided to go our own way, and that's when we were catering for the private bankers in Dubai, in London, in Switzerland, and one of a family office client approached us and said, we want to hire a private banker to come and work for us. So spoke to them, got to know the client, and we realised actually they don't need a private banker, they need a trust lawyer, but they just didn't know it at that point at the time. They had loads of family members in their later stages, lots of trust relationships that needed to be restructured, and we ended up guiding them and saying, look, you don't need a private banker, you need a trust lawyer, and that's how it all started. They referred to another family, and it grew from there, and we realised actually the barriers to entry are very high because there's not, like banks, there's lists of banks out there, they're very secretive, you do a good job. And I think what really attracted to us to this particular market is we were really adding value. So these guys were coming to us with problems and not knowing who they needed, in that example, thinking they needed a banker and actually needed a lawyer, and providing real value, and then that snowballed from there, and now that's all we do. Yeah.
Wow. So you only focus on single family offices right now?
Yes, so I'd say there's a bit of a blurred line, as you know from talking to fact that some of them are what we class as closed multi-family offices. So maybe so there's the types of clients we work with will be a family that's had a liquidity event. They've grown an operating business for say 30, 40 years, realising that Gen 1 principle has not got the motivation to carry on doing that anymore, and they want to provide wealth for the family for generations to come. And also they have huge risk held up in that one investment asset, so they start to diversify and look to invest in other asset classes. And maybe the family members are not interested in that business, so they maybe sell a majority stake, a small portion, whatever, and generate some income. So so that's one example of a client that we work with. Another example would be like a long-standing name, like a Rockefeller in America, or a Rothschild in Europe, where they've had generational family offices, and there's either a change of leadership, the CEO's decided to move on, or maybe they're changing their investment strategy and they're getting more involved in directs, but they've got no one, private equity, no one in-house, so they need to bring that in. So it's a mix of roles. So maybe that will lead on so I can explain the types of
go for it.
Types of roles that we work on.
I was going to say actually, is there a most popular or sought after role, or is it literally case by case depending on the family needs?
I think all families are so unique. I'd say the similarities that we've seen is that every family has some form of financial control inside the family office. So when we're talking about CFOs, financial controllers, bookkeepers, someone who's managing their accounting and tax position, globally, locally. So that's one thing. So at the moment we're helping the family office set up, and they need a CFO. That's very common. That's the driver. The other element is there's always some form of investment expertise in house. Again, not every family is investment specialists. They come from making their money through manufacturing. They may still outsource a large part of this. They'll allocate to funds, they'll give money to banks still, they'll give money to multi-family offices. They'll have some form of oversight inside the family office, whether it's a fully fledged CIO, whether it's investment analysts, investment managers, and sometimes there's a bit of a blurred line. It could be just a CFO who oversees the investment relationships out there. So those are probably the two most common. And then you've got various other, you've got operational roles. And when we say operational, we're talking about whether it's operational from their investments point of view and also their lifestyle. So, and that could be anything from support of their houses and their estates and their private assets from yachts and aircrafts. Yeah. We don't personally as a business hire for the actual, the staff within these assets. So we wouldn't hire for the nannies, the butlers, the aircraft crew. We would hire the chief of staff that manage those or the operations managers that manage those. So there's that operational line. And then what we've seen probably more in the last 5 years than maybe in the last 15 is there's been a need for some form of in-house legal expertise. Again, we're helping a family office set up at the moment and they need a general counsel. And the level of legal expertise can vary. Obviously, legal it can be very specific. So if you're involved in buying companies, you need specific types of lawyers. If you've got litigation issues, you need a particular type of lawyer. If you're buying properties, you need but there's someone that can guide all of those legal transactions, know that actually you don't need to pay a New York lawyer for this, you can do this locally and save some money, or actually we can bring this in-house. So that type of exposure is quite common as well.
What kind of types of people are you working with here? Are they multi-generational? Are we down the line, G3, G4, G5? Is it brand new? Is there a typical? And I know the answer to this, but what can you characterise?
Yeah. So do you know, it depends where you are in the world. I think that's a big driver. So in for example the US, that's probably where the family office concept started, and there's obviously a lot more mature. So there's a lot more families that are in their second, third generation. Whereas if you looked at the other scale, for example, in Singapore or Dubai, there's a lot more new wealth created, so we're setting up a lot of family office. But even saying that, London again is probably, regardless of what's happened with change of government and change of policies, London is still seen as a hub for the professional services industry, expertise in talent. Families still want to be here culturally, so there's a lot of family offices setting up here, and these are, again, still new wealth families that have had a liquidity event in their business and setting up. There's just probably more families that are in their second and third generation in London than there are probably in Dubai. So it's a combination where you are in the world. I would probably say, if we looked at it last year, and I think 53% of our mandates across our business globally was through new creations of family offices, so new wealth, and that was pretty much all driven by the example of liquidating a business, selling a business, having cash. There was an element of wealth transfer from generation, and I think from all the stats that you see out there, there's going to be huge amounts of that coming forwards. But most commonly, it's just sold a business or a majority of that business, and they're looking to then set up a team to run that. They'll still run that business. They'll still own the equity in that business and run it from the family office, but they'll generate new investment opportunities elsewhere. Yeah.
How do you find, in terms of your service offering, how does that differ from the older generations, let's say the Rothschilds, and the newer generations and new established family offices? What are, I guess, the services that you find kind of characterise both of those two groups?
Yeah, it's a good question. I think it's not always about the generation. It's often, and we try and the families that understand this are the ones that are successful. The guys that understand their purpose, why are they doing this? Often people come to us, they've got all this cash, 500 million in the bank. It's just what a problem to have, We were laughing with a client last week, and it generally was like, well, what are we gonna do with this? And but once you understand that purpose, then you can decide what you want to do, and everything drives off the back of that. The type of people that you're going to bring in, in-house, do you outsource that? Because do you really want to take all that risk, and do you have the expertise to understand all the investment capability? Maybe you need to partner with someone externally. Are you going to, then your compensation strategy is going to be linked to this. So if you are really low risk wealth preservation, you're probably not going to be so incentivized on the top end. And to give you an example, we had a family client that the guy that made the money, he had no heirs, he had no children, but he was extremely into philanthropy. So he wanted to continue giving, way beyond his lifetime. So because we offer a compensation consulting service as well, that's another part of our business that we do, that we monetize, we charge for that. And but we sat down with him and realised that he doesn't need to attract someone that's going to be wanting carried interest and cut of the profits or whatever it may be. He needed someone that was going to grow this well for manager. Maybe they had to pay a little more on the base, but but there wasn't a driver for performance. Obviously they had KPIs you had to achieve minimum benchmarks, but there wasn't really pushing for that. So that would be an example of how purpose drives a lot of decisions in the family. One thing, maybe what we're seeing is that the younger generation are probably more looking at philanthropy and impact investing as motivators if they've not made the money themselves, and also the later stage generation are really trying to professionalise more and make themselves more institutional in nature as opposed to just very ad hoc and very basic. Yeah.
What kind of level are we talking here that you advise someone that now is the time to start hiring people in terms of AUM? Because we can define the AUM as what defines a family office. There's a very, very wide spectrum.
Yeah.
When is the right time for someone to be hiring people?
So if we do a lot of surveys on compensation. We collaborate with KPMG. We did one in 2023. We're doing another one in 2025 this year. Where it's probably one of the largest surveys out there. There was 650 family offices last time. Hopefully we'll do more this time. But one of the questions you ask is the size of the AUM, because a lot of the data in our survey links salaries to the AUM, the sophistication of because they make a big difference. I would say typically family are not fully fledged, because we talk about a maturity model in a family office, which I won't bore you with now, but it's from the very early inception, creation of wealth, bringing on people that from your business and trying to get yourself set up to the apex family office where you've got everything internalised. You have there's only family involvement at the board level, so there's a real sort of mix in the two. I think with regards to what we've seen over the last 15 years is maybe the barriers to entry to have a family office is reduced, but it's offering a different service. So you've almost got this like virtual family office. So you may have 100 million, but you'll have one point person, who's going to be CFO, CEO of the family office, and then there'll be a lot of relationships outside. So you'll outsource your investment capabilities. You'll have external advice on maybe some form of accounting. But this person will make sure they're controlling fees. They're an oversight.
And they're still working with private banks at that point. There's still a
probably
crossover.
Still work. Yeah, I mean, to be honest, a lot of family offices still work with the banks because you do the data, the teams they have. That it's still there, but they just wouldn't give all the money as a discretionary mandate. Yeah. So there is still relationships there. I'd probably say as the most common stat, and again looking back to our surveys, is the $500 million to $1 billion range is where most family offices sit that have, a substantial amount of people in house. And we're not talking 50. I think 5 to 10 is the most common number of people in a family office, but it tends to be around that level. Anything below that, it becomes you've got to outweigh the costs. I mean, family offices are a cost centre, but they obviously they've got to provide value. Yeah,
of course. So do you find that most of the families that you work with want to hire in-house, or do you find that some have a preference for outsourcing? How do you manage that? Do you gauge it by the family office's needs and wants, or do you advise?
Yeah, so it's a combination of depending. It's all on advice. So typically a client will come to us when they've had that liquidity event. Mm-hmm. Typically they've got some relationship at that point, so it's the lawyer that helped them do that transaction. It may be the CEO that's run that business for many years, and we sit down and we discuss with them what do they want to achieve, why do they want this family office, and what's the purpose. Obviously, we always encourage to start small. It's detrimental to our structure of trying to hire more people and pay, but in reality, we always advise start small and see how you go from there. But this is when we talk about this maturity model, that's at that early stage of setting up a family office. We would say don't stay in that stage for more than a year, because then it becomes too costly and you're outsourcing, you're spending too much on fees. So particularly if you're a size of family office, if you're a $500 to $1 billion family office, you need to start seriously thinking about professionalising, bringing in-house talent. And then it will come down to, one, your sophistication. So if you've made your money in hedge funds, chances are you're gonna have your own internal investment structure, or even leverage off maybe one of your funds that you've started, and you'll probably bring a lot more in house. If you're unsure, if you've made your money, say retail, for example, you still may not be fully aware of the investment, so you might start off with a relationship with fund managers and then slowly bring that in-house. But you'll need to hire someone to guide you through the investments.
I was going to say there's probably quite a defined line, and one of the only defined lines in this space is a family office that's coming from a financial background, and understanding of investment and that space, and a non-financial one that's made their money in toothpaste and cars or wherever it might be, FMCG. Is that really specific? Because you're hiring different people into that thing. Is that what you're saying?
Yeah, it is. It is specific, and I think what we've realised, and we've been doing this for so long and talking and surveying, is that I think one of the biggest concerns we have for family offices, and we try and talk to them and advise them on this, is that the lack of governance. So, and when we meet, I think in our survey there was 40% of family offices had no governance structures whatsoever. So we're talking about investment committees, boards. We speak to families. So we've got an investment committee. And who is he? Oh, it's my friend. What does he do? Oh, he's a doctor. Okay, brilliant. What's my? Oh, she's she runs this.
That was 40%.
PR, yeah, 40%. So we say, and we slowly talk to families, and they realise that is an issue. So the example of growing your business for 30, 40 years, you've all your hard work, and these businesses are hugely governed. They've got they're run very well, and then they've exited and they've got all this money, and then you hire a CIO for us, which they'll be great. They'll be qualified, great track record, everything. But it's still a lot of responsibility for that one person to run the investment. So we say there's always should be some oversight. So one of the trends we're seeing is hiring non-execs, investment committee members. They're not full time. They're consulting on a day, number of meetings a year, but someone else who can give an oversight, who is also an expert in that world and has done that job for other families and can say, I think, just trying to eliminate that risk, essentially.
Yeah, definitely. So my next question would be, how do you find these candidates? How do you find these candidates?
It's obviously quite it's a dream job for lots of people, especially in finance.
Yeah.
It's the top of the pile now. So
that is the
you hold the keys.
Yeah, that's the. I mean, a lot of people do see it as that dream job. Wow, I'm working for this billionaire family. I'm going to spend weekends on the yacht. And access to the private jets. The reality is that is not the case. Often. So we've never find it too difficult to attract talent to the business. I mean, luckily, because we've been doing this for so long, our internal database is huge of qualified candidates from family offices, from the peripheral areas, from banks, funds, etc. Our social media coverage is pretty strong. We have 8,000 followers on our subscriber email list, which is candidates, clients, and the market. So we've got. It's quite. That's not to say easy, but it's not too difficult. It's just finding the ones that's right. That's where it becomes difficult, because cultural fit is the key for most driving, in all family office hires. And every family office is so unique as well. So you may be that you've got to be a, investment specialist, but you've got to have a language skill. You've got to have experience in this, and this. But then you've got to be a sort of person who is not a servant mentality, but someone that hasn't got an ego, is someone that could roll their sleeves up, do the sophisticated $200 million transaction, but not be, too proud to, make the principals, friend a cup of coffee when they come into the office. And I mean, it's quite a wide example, but I think someone who's a problem solver. They might not be an expert in everything. They'll be the specialist investment manager you covered, private equity, but then the principal decides to invest in bloodstock, had no idea about this, but they can use their skills and experience to ask the right questions, get advice from the right people. So the roles they can be quite unique, but again, they can seem quite attractive from the outside. And once you get it right, I mean, we've got a chap who sits on an advisory board from a family office. He's public, so he's on this. I'm happy to speak about it. But he joined and he's been there 38 years. It's just there's so many examples where there's a great relationship.
Once you're in, you're in. And
you're in, and it's a fantastic career, and and it just really
there
works.
There are a few jobs that trust is so central.
Yeah, and we see CVs, particularly in the investment world. I mean, again, we don't deal with the banks and the investment managers, but the CVs people, moving around so much, it surprised us. We say when we started 15 years, we looked back to the first year's placements. Obviously, there was a lot less 15 years ago than there are today. But there was like 90% of those guys and girls are still in the job now. It's like 15 years later. So we're like, that's quite unique.
That's a huge stat.
Yeah, that's huge. Quite unique. I think it wouldn't be the same now because we've done a lot less number of placements. But then it's still, we look at the banking world, that just doesn't happen. No.
I think it comes down to those blurred lines in a way. I mean, to your point before about people getting, really stuck in, and this is your job role, and then you've got everything outside that with the family office space. From what we've heard, speaking to members,
lots of hats.
It's a lots of hats. So I think once you build that relationship and you become kind of central to the family office fabric,
you get trusted more with more roles, more tasks.
And the problem is that it's so true, but then the problem is that at that point, the family members don't want you to leave either. So there's so many examples, and we're dealing with guys now, and if they're listening, they'll know who they are. That they've done a great job, and they want to leave for no reason other than it's the right time in their life. But the principals don't want them to. They're really reluctant because they trust them so much. So you need to bring people in. And there's got to be succession planning. I mean, there's got to be succession planning in the family, but actually the team as well. Yeah. So, and it often means bringing them in for maybe a year, which seems like a handover period seems ridiculous, but it just gives them that time to build a relationship with the family, build trust with the team, and then they can make that transition outside.
How should someone approach you or approach getting a job in the family office if they are, let's start at grad level, not many people going in from grad level, I guess, because it's an experience thing, up to, they've been in industry, they've been in finance for 10, 15 years. Yeah. What are the normal routes in? What do the candidates look like? How do you get a job in a family office? Yeah,
so I think we've seen, funny enough, we wrote a piece on this about junior hires, and we try and encourage more families to look at that as an option, because you can then, obviously, the same applies to building cultural fit, the right type of person, but they can grow with you as a business. And I think we've seen over the years that for like the high caliber Cambridge graduate, it is actually now a realistic place for a career, people seeing that, whereas 15 years ago, it was probably a banker, retiring, this is going to be a nice, 4 or 5 years of my life that I can see out. That is changed now. That is a genuine place to be. So I think, the way that we've got the network already. So coming to your events that you guys host, you meet people, I think it's just that relationship building, and then often you have to be right for that role. I think is the key. So unfortunately, we can't help everyone that wants to work in the role, because there's so many specific and cultural and skill set requirements are just not right. So I think it's just meeting our team, talking with them, sharing your profile, getting to understand them. That's the best way that we do it. And as I say, would it be fair to say that I know you've used this phrase a lot, but your job relative to other recruiters is probably more art than science, because you can't just say, okay, they need 5 years in credit, and you can put them into the next banking job. Like, you have to match the actual personalities and the ethos and the philosophy of the family with the candidate. 100%, yeah. So, obviously they've got to have the technical skills. So, if they've worked at, Carlisle Fund for 10 years doing a specific role, they're going to have the skill set to do it. Obviously, you need to be proven to make sure that they're technically strong. But then after that, it's about all those other things you mentioned, and they are the key things, and even just expectations. And we say this to families, you need to come into this, I want a Harvard graduate, and I want them to pay $100,000. We're like, you're not going to get a Harvard graduate. Why do you need a Harvard graduate? And what's the reason? And that's, we try and and what can you offer this person? Oh, nothing. It's going to be the same job for, the next 5 years. Well, that's not going to attract that type of person. Well, they're competing against Goldman Sachs. Exactly, at the same time, right? So. Yeah, exactly. So we say, look, mate, as long as you've got your expectations, you can offer the right thing. So it's got to align, like you said, career, they've got to have the same expectations there. Culture, they've got to believe. So, we help families that maybe invest through Sharia and compliance. Not necessarily, you don't necessarily need to be specialists in that, but you've got to have the same values that person. So there's so many different, things that need to match up. Yeah. And then it just comes down to the relationship, trust, that element of it. Can a candidate expect to learn? And if especially younger people who are coming in, the first 10 years of your career really is about learning things. And
Is a family office a place to do that? I guess in more
Yeah.
sophisticated ones where there's a team above you, maybe.
Yeah, exactly. It's sometimes it can be. I think you're right. In this, family offices tend to be lean outfits, and the guys you speak to that work and run them, often they'll come to us when they're literally, that's the point they realise if they don't hire someone, they're going to be making mistakes and it's going to be costly. So, and it's natural. You want to keep the cost down. You want to get as much out of that team as possible. So, it's not always that easy to learn in that environment, but families are changing. There are bigger teams, bigger structures where the opportunity is amazing because, a private equity firm, I keep referring back to private equity, just because it's an area of real big interest in family offices at the moment. But they would, there's a ladder to climb, isn't there? There's stages you need to go through in a private equity firm to get to a senior associate, partner, etc. In a family office, you can get there a lot quicker. You get access to deals. You get access to things you never would have done outside of the family office world. So that's where it becomes really interesting.
Yeah, it's really exciting stuff.
It's
isn't
great.
it?
Yeah, and these guys, and then you become so key to that business, and then you end up doing things that are way beyond your years. So it's a really exciting place, and the CIOs of these businesses realise if you've got someone bright, young, who's capable. If they can give them some training and guidance, then it really, really helps. Yeah.
So you've touched on graduates, so we've also worked our way up to CIOs.
Yeah.
What are the salary ranges? So what do people get paid within a family offices?
Yeah. So again, we've done it's like 115-page report
We'll share a link to that on the podcast
and there
as well.
will be a new one this year. So we do it every 2 years because we found that there's not a huge difference in changes, year to year. So I think this one this year, but the ranges in family offices, and we trying to get as much data as possible to give us as a better accurate figure as possible. Even then, the ranges can be quite wide, and it comes down to. Initially, it came down to the generosity of the principal, which is it seems crazy, yeah? But now because of these benchmarks, it's becoming a little bit easier. I think it comes down to the size of the AUM, so that's one thing. Obviously, it makes sense that the larger the AUM, the more that they can pay, because the costs allow that. The sophistication, how much is in-house, how much is outsourced, that can have a factor. There's so many different things. And so the fixed salaries, and then like you mentioned earlier, you are competing with the funds, the banks, that's a pretty benchmarks industry. So if you leave Goldman Sachs and go to UBS, roughly what the level of salary is going to be. You may get a 10-20% uplift, but you're not going to be 50% different than one of your peers. So, but in family offices, it can be quite difficult. So again, that's where I think they've seen the value in us, that we know what the market is. Unlike some firms, we have proprietary data of placing these people for 15 years, and actually know what they're earning. So the ranges depending what role you're talking about, can vary. I think the biggest thing is, and this is where we're doing more and more work on, is the full comp. So short term, incentive planning, so your bonus every year, and then LTIPs. So families that are successful, been going for a long time, and further along that maturity model that we talk about, they have an LTIP structure. So and again, we can talk along on that, but typically it's driven by the whole fund. So they'll have a benchmark for the whole fund approach, what they aim to return, and every 3 to 5 years, if they achieve that benchmark, there'll be a payout to the staff, and that could be not life-changing but significant, and again, it aligns interests with the staff, it creates loyalty because you're working to that. But then there should also be a short-term bonus like they would get if they work
for a long-term incentive plan. In a bank would be huge, right? That's really long. That doesn't really happen that much in a bank. But in a family office, they want to keep you in there.
They want to keep them there. I say we've seen more of this when we were looking at hiring, again, private equity staff, because they do get carry. That's the model in pretty much all private equity firms. But then they're motivated to sell their businesses every 5, 7, 10 years, whatever the strategies of that family. So they know it's going to happen. But whereas in a family office, they don't need to sell. The investment horizons are a lot longer, so they may hold them forever. So if you're not exiting, how does the team get paid? Their carry. So you know, we know, and when going back to your attracting from that market, when families come to us and say we need this type of person, we explain to them, well, this is how they get paid here. So there's trying to be a hybrid. I still don't think carried interest is the most common used, you know, instrument for paying, you know, staff in family offices. More so in America than I'd say the rest of the world, but it's still quite unique, I would say. It's that what we're encouraging is that whole of fund benchmark return that will give multiples of salaries every 3 to 5 years, as well as a yearly bonus, which will, you know, be, again, we've got it in our, depending on what role you're asking for, it's in our salary report, where a CIO may get 100% salary, where an investment analyst may get 30% of their, you know, their salary every year. And again, it's discretionary. It's not contractualized. It's based on some KPI benchmarks. You know, and then if the family at the end of the year can, you know, believe that that's been achieved, yeah.
Actually, at the Family Office Summit in London, we did in October, all the panels were set by our family office members. Instead of making them sponsor-driven, we want to make them driven by our guests so they can actually learn some stuff.
Yeah.
And one of the major things that came up was that when someone's sitting in a family office, it's very hard to know what other people are getting paid in other family offices, and if they are, you know, on par, above, below. And I guess you're one of the only people that really know that. So that's in the report. It's useful data.
Yeah, and we what we do. So the business was driven, as I mentioned, recruiting. You know, but then probably about 6 years ago, a client came to us and wanted us to. There was a dispute with a family member, not a family member, sorry. That was a different example. But there's a dispute with a CIO who'd been there for 10 years. You know, and the year that had outperformed, he got less of a bonus than the year that he didn't do too well, and he couldn't work out why. And it literally came to the end of the year of, you know, how the principal was feeling, and signed, and that was it. And they walked away. But obviously, that's not good for retention. And he was thinking of leaving, and the principal really understood at that point. And we did a project and said, well, look, let's review what you do. Let's compare this to the benchmarks that we know, and that's how that sort of business grew out of that. Really? And it came, you know. Basically, you know, and what we do, we interview the stakeholders, the team, we find out what the role is, and you often, and most of the guys that come to your events who are, you know, C-suites, you realise they're doing multiple roles. So we look at that and say, well, look, he's been with you 10 years. To replace that person, he's a CIO, but reality is also a COO as well, because there's no other person.
So, what you're describing here is almost an ongoing consultancy relationship with the family office, rather than one placement. And you step back. They're going to keep coming back to you.
So we will do that on
a
project base. It can be, or can just be a one-off project. So we'll just sit there and it's pure for retention, to make sure that the team are, you know, because they don't have in-house HR. So we'll interview everyone, find out what their actually role is. We'll obviously then dive into the investments, as in what the returns are. You know, it's all NDAs and contractual. And then we'll compare that to the market based on the size of that family office, the sophistication, and then we come back and we obviously discuss LTIPs and all the rest of it, and we present a report of potential suggestions. We don't say this is what you've got to do. We say this is what we would suggest, and obviously then that can encourage. You know, it can help with retention, and even the guys that are going really well and been running for 15 years, they often do this just to make sure that they're competing and to make sure and also it's a good opportunity for the team to talk to someone outside a small family office. And when we do this, sort of distract off the subject a little bit, some of the things we find is that it's not just money's great, and obviously you need to be you know, at the right level. It's got to be, you can't be under, because people will leave. But often a lot of things people are missing in family offices is that professional development. So again, going back to the business you run, having those opportunities, even just networking, learning, those types of things are great for retention. So we put it all together and we try and suggest LTIPs, you know, based on experience. We suggest levels of short-term incentive, and that hopefully encourages, you know, the team, you know, just that one element that they want to stay. On the other side of it, we found it when we review, we'll say, well, actually, you're playing way beyond the benchmarks for these types of roles. So, which is great. They're not going to leave, but they're going to stay even if they're unhappy, because they're not going to be able to move on and you know, get another role at the same level. So it's quite an interesting sort of project when we get involved in it.
One of the challenges we face a lot, and we've recently launched a program to try and deal with this, is people faking.
Yeah.
Is the fake family office, and that's my take would be is that that's much more prevalent in our side of things because they are not parting with cash with us. That's not something that we do. But in order to engage you, they actually have to pay the fees, right? So do you see much fakery?
It's unbelievable. Yeah, it is unbelievable. Over the years, it's less so now than it was many years ago. I mean, so we only work on a retain model, so that people. And again, we did that not because for monetary value, just to make sure that the people that are serious want to get involved. They're not fakes. So if you're going to, even if you've got you've got billions, you're not going to pay someone for no reason, are you? So and it's all refundable, etc. So we realised early on that's a good way to wean a lot of these people out. But we've seen people, and I still don't understand the motivation, particularly for us. And we had a guy who was growing a family office, and invited us to his huge party at Hideout Cafe Paris and all the rest of it. We're like, okay, great. But the day before it got cancelled, he'd hide out the whole. And you start delving into these things, and you're like, why are they wasting their time?
There's a multitude of reasons, right? We have so many different access to events, deal flow, meeting other family
It's the
offices.
ones where there's no financial gain that baffle me. It's purely just an ego thing, and they want to be the big I am.
Yeah.
Which is because it's a lot of effort to go to just to be seen as someone big and special.
Yeah, I mean, again, thankfully for us, most people come into us when there's a need, and they need us to help them, and there's no real reason to approach us if they don't want to hire staff, or they need advice on conversation, or just advice on setting up as a whole and who they need internally. It's unusual, but it does happen. And again, you hear about it through all the networks. Yeah. There's people out there.
It's crazy. I mean, we've always had a list of our own with people who have been bad actors.
Yeah.
It's very difficult to define exactly what, but when they've been bad actors, or there's a flag's gone up, and since we've started talking about it a bit more openly, everyone's come out and kind of said, oh yeah, we know, we've got our own lists. Yeah. This person has done this, and so we're getting hopefully some more clarity in that space.
Yeah.
And we're going to be doing more and more of that, and just trying to help people navigate a bit more, basically.
Definitely. So what I was going to ask next is, how do you usually meet these principals or get approached by these family offices? Is it? I mean, I'm sure there's multiple different streams. Yeah. But how do you mostly?
So I think so. I'd say 90% of our business is like inbound. So people will call us, email us. So again, how we first started was just doing a good job for one family. If you're a billionaire and you mix with the same circle. So if one family office friend will probably have another one and they recommend. A lot through our network. So there'll be touch points when you've sold the business. You've had to deal with a lawyer or a banker, and they would have said, we now need to set up the family office. Who do you go to? And that's often they go, well, we know Agreus, so that's one way. It can just be through networks. It can be through our content that we create. There's so many different touch points, I would say. Typically through word of mouth is the biggest one, yeah.
So we, as ever, there's a million questions here, but I wanted to kind of maybe wrap up a bit with how this space has evolved since you've been in it, and where you think it's going next, because obviously there has always been family offices. You right back to the Medicis, the original, all the way up to present day, and as we mentioned earlier, that transitional wealth is going to be creating a lot more as we're going forward. Yeah. What's been your take on that since you've been in the industry? Yeah,
I mean, we've seen it, and again, it depends sort of on the region, but even then we've seen, I think the biggest thing we're seeing, and what I predict for the future, is professionalisation. That's where we're seeing that, and that goes from governance, making sure they're acting and behaving like institutional firms. They're having IPA, investment policy statements set up. They've got purpose. They've got teams that can oversee. So they're bringing what they need in house. So I definitely see that the future. I think there's going to be a lot more family offices as well. Again, of all different sizes, and I think potentially. And again, we've seen that more in the US because maybe they're a few years ahead of us. But our office in New York sees this. There's more multi-family offices. It's a difficult, and again, it's probably a topic we could talk about forever. It's a difficult thing to get right because but that's potentially happening. But professionalisation, bringing a lot more in house, and I think we've seen it. I mean, family offices are like the drivers of capital. They're the guys that invest in and women that invest in They're the people that are invested in the vaccines. They're the people that are giving to philanthropy. And, you know, a lot of these billionaires get bad raps, but they are, you know, we see it from inside, and they're not always talking about it in the media. That, you know, they're the people that the funds go to. If a company's being sold, families are buying that, and they're holding it for long term. So I really see family offices as massive impacts, you know, globally, and the only way they can do it properly is having a proper professional, you know, structure set up.
Just on that one before we wrap up, you mentioned MFOs, and we struggled defining when an MFO is an MFO or not, and when it becomes an asset manager. We kind of think of it as, you know, you are an MFO if you still have close proximity to the people you're working with and they are true clients. But if they are balance sheet numbers, then you're becoming an asset manager. Yeah. Would that be a fair characterization? And is that why you stay away from MFOs in general? Because it's more confusing space.
Yeah, it's a different. We walked away from that world of bringing on assets. You know, it's all about driving assets and how much you bring. We didn't like that because it's a lot of it's out of control of the people you hire, and it's just a different world. We provide solutions to their problems, and that is by finding people with, you know, legal, accounting, investment skills. So, but I think most multifamily offices are driven out of a small team of really top bankers from Goldman Sachs. They've got some 4 or 5 key clients. They then open up, and it's not as commercial. They're not looking to bring on too many more clients, but they're not. You know, it's not the same example as 2 founders of business sell it. They just, you know, they combine their wealth for, you know, economies of scale and cost, and they just run their assets. Most of them are in that bucket where it's commercial, they're an asset manager essentially, but they're just a dedicated asset manager, I would say. Yeah.
Wow, yeah, super interesting stuff.
Yeah, I want to talk a lot more about cooperation between family offices and co-investment, which is a big theme. But as with all our other guests, I think we're going to have to get you back. Cool. Maybe around when the next report comes out.
Yeah, 100%.
Fascinating.
Yeah.
And we'll make sure everyone gets a link to that and we can see everything.
Yeah.
But thank you so much for your time. Really, really
thank you.
Fantastic.
Great speaking to you both. Thank you.
Wow, okay. Interesting interview for sure.
Yeah, he's got a breadth of information about the family office world that very, very few people have.
What part stuck out to you the most?
I think the fact that it's not a kind of pump and dump. You know, they're placing people and you know, they move on to the next client. They really are, you know, in bed with these clients for the long run, and the ongoing consultation is very different to you know, maybe a direct single hedge fund hire where you move on to the next thing, where they're constantly learning from the family office, and it's even more relationship driven than anything else. It's not just about, you know, the data of a CV and the years of experience and the fact that you've got Kayas or CFAs or what have you. It's really artistic what he does basically. So yeah, that's the bit that jumped out for me. What about you?
I found it interesting talking about, I guess, the different, you know, the more established family offices and then the newer family offices as well, and how those needs, you know, vary. And, you know, the bottom line is with all of this stuff is you have you kind of want a baseline, but it's not one shoe fits all. Yeah. And that's what we're learning with these podcasts, is that there's no average. Yeah. But there is definitely some interesting points that we spoke on in regards to different needs for different sizes of family offices and different generations. So yeah, I think overall I was super interested. To be honest with you, I just really wanted to know how much everyone was getting paid.
That is always a big question, because no one knows, and you don't really share it with each other. So having a direct platform is pretty good for that. Yeah. Okay, well, we've been talking long enough, and we are on to, you know, again, as we always say, a packed calendar of events and connections, and we've got a whole bunch of new members to let in and welcome.
Definitely. I mean, we talk about all the events that we've got abroad, but I mean, next week in London or the week after, we've got a couple of private dinners, drinks. So the community here is really bustling, but it's exciting to think that, you know, AYU is really going to be going to so many different places.
Ambassador's starting to host in Zurich and Miami right now, and also we're in New York next month with George at RFA, one of our founding sponsors, Jersey Finance in there too, 2 of our long-term guys, and loads of exciting stuff to come. So let's get to it.
Yeah, let's do it. All right, thanks guys.